Hi, it's Chris, and I want to provide you with the backstory on this content so that you understand how it came about over time and why it is so relevant in today's super competitive marketplace. See, 10 years ago, I was a newly divorced father of two trying to do something that would provide a flexible schedule plus income. I really wanted to stay local and not get back into a corporate career so I wouldn't have to miss having a good relationship with my kids while getting stabilized after a divorce. I wanted to be able to create a great home environment for my sons. See, the thing was, I was essentially a startup business with limited resources to market my business. And that meant I wasn't able to create a stable home environment, let alone spend time with my sons. And to make things worse, I felt terrible because I didn't have the income cushion that I was accustomed to having. And I knew that the failure rate for real estate agents was super high. I felt even worse about the situation because I could have produced much more income if I had just stayed in the corporate world, which would have made things much easier coming out of a divorce. I felt like between the divorce, the business start, and the home environment that I was falling behind in life. But the real problem was that while I had a ton of business experience, I didn't have the systems created and in place to help home buyers get through the process smoothly, which meant consumers not being fully aware of the home buying process, resulting in customers having to write on two or three properties, which gave me even less time to create the systems and content needed, which meant my customers had to go through the offer process more than one time, and the sales cycle was longer for both the customer and me. And then, as if by chance, something amazing happened, as it always does. That's when I met a title rep who told me about how he helped realtors in Arizona grow their business using video. And I discovered how agents on the West Coast were using video in their marketing now. It was now crystal clear to me how to use video to break down the home buying process into smaller, easily understood parts, and that these videos could be provided to my client before entering into the next step of the process, resulting in my clients being better prepared, which helped them get through the process much more smoothly. As a result, I created a video resource library that my clients can view from the comfort of their own home when it's convenient for them. After I did that, I started to notice that clients were more happy and had a higher chance of getting the home that they wanted. And suddenly, I was receiving more referrals from happy clients, and the revenue for my business became much more predictable. That's when I realized that the secret to customer satisfaction was educating my clients using video. And my plan was to start increasing the amount of content made available to my clients. So I started shooting videos on the equipment that I had, but I didn't stop there. I invested in software and other equipment to help me edit and send videos. After that, I started to use videos in combination with text and email to show new listings and properties coming to market to my clients who needs closely match those properties. But there was still a challenge. There was still a problem. Even after all of that, things stalled in 2019 when the Amazon announcement came and took its toll on an already decreasing inventory market. And buyer demand for single family and townhouse inventory increased, while interest rates remain low, meaning today's buyers now face stiff competition. And with COVID, even more buyers are looking to move into from their apartments and condos into other properties. So while my videos explaining the various parts of the home buying process are great, there was something missing as the content addressed the process, but didn't help buyers win the offer process. And more needed to be done to help clients understand the preparation needed to beat out competing buyers. So I ended up getting a little frustrated, and I started to observe more closely the listing side of my business. And I was developing video content needed to get buyers ready to purchase in today's market and to pull the curtains to expose the largest blind spots that buyers have that keep them from winning the home. I chose to call this training How to Buy the Home of Your Dreams Without Having to Lose in the Offer Process. See, I thought if I could create something that would make it possible to provide a training for my clients that prepares them to beat out competing buyers and take away frustration during the process, that everybody would be happy. And after many months of research and planning, we had overcome the obstacle of we had to overcome the obstacle how we deliver this training, as meeting in person or in group seminars is no longer a popular option. So now what we've done is we've created a webinar, and I can provide my clients with valuable information that includes the offer process, which can be viewed, played, played back, and the content puts them in a far better position to win. And as a result of this, we're able to achieve the following. We prepare our clients better than any other agent, meaning our clients are better prepared and in a position to win. And I'm off to the best start of a spring season that I've had in over the last 10 years in a decreased inventory market. And after creating this presentation, I was not only able to prepare my clients and get them past the largest blind spots that keep most buyers from getting the home, I've also been able to stop the hassle of having to write offer after offer for each client, because we can now write a compelling offer the first time. And in the end, all of this means I'm now able to save my clients hassle and time, but more importantly, get my clients the home that they want. The largest benefit that I receive, in addition to a satisfied client, is that I'm now able to spend time with my boys and achieve the goal of why I originally got into real estate. I sincerely hope you enjoy the training, and feel free to reach out to me with any of your needs. All right, so let's get into our main topic today, which is how to buy the home of your dreams without having to lose in the offer process. So, where are we now? And I think that's a good place to start, right? So, right now, I get a lot of questions from people that say, "Hey, Chris, is this like a bubble? Is this like it was back in 2008?" And the answer to that question is no, simply no. This is not about lenders lending money to borrowers that aren't qualified. What we're really dealing with is a pure supply and demand issue, right? And I'm going to show you a chart in a few seconds that'll show you the supply since 2016 going downward. But I'll tell you a secret. We've seen the inventory shrinking from 2011. For as long as I've been in the market as a realtor, I've seen decreasing inventory year over year. The thing that we see now is it's just been so much more heavily decreased from 2019 forward. And that would have been when Amazon came into the marketplace and announced that they were moving HQ2 here in Crystal City, which is close to Alexandria. So that has kind of tightened up the market as well. Now, buyers have remained constant. In fact, we've even seen an increase of buyers because we've got low interest rates, right? And we're seeing increased buyers because they're now working from home and need bigger space because they're working from home. So people don't want to be around each other. So we see a lot of people moving out of condos or apartments, trying to find a little bit bigger space, and they're not as concerned with being as close into DC as they once were. So what we've seen as far as agent activity is we used to have about 12,000 different agents in Northern Virginia that you could select from. And some of those were part-time agents. Some of them were full-time agents. There was just a mix, right? What we're seeing right now is most of those part-time agents are trying to do a little bit more real estate because they're working from home. They think that they should and can. And as long as their employer is letting them work from home, that they've got a little bit more time in order to be able to do a real estate transaction or two, do maybe one or two or three more a year, right? And then we see a lot of people that are disrupted from the service industries and from the food and beverage world coming into real estate as well, right? And so we see, a good amount of inexperience in that agent field that you have as a disruption as well. So there's a lot of stuff going on in the real estate market, and it's important that we at least start there so that we know the hurdles that we've got to overcome in being able to get our offer accepted. And you're going to see here that failing to prepare is preparing to fail. And that's going to be one of the biggest messages that we have today. And we're going to share with you some of the blind spots that buyers have that's really about a lack of preparation. So here are the active listings in Northern Virginia, and it's really kind of cool. It's really, you can see here that it goes up to over 9,000 back in 2016. And now look at us in a world after December of 2019, right? We're getting closer and closer to that 2,500 range. And now, in 2020 and in 2021, you see us below that 2,500 unit mark. So on the left-hand side is the number of units, and then the years are in the bottom. So you can see that this inventory continually has been stepping down, and the amount of buyers has stayed constant throughout those years. And over the last 2 years, those buyers have increased, right? Because the low interest rates and then the new changes that we have based on COVID. Today, what we're really going to talk about is getting our offer accepted, but there's a few things involved with that. That's preparing the right way to make sure that you've got the right professionals and that you've prepared financially as well. We're going to talk about speed is key when finding a home and the importance of having the right tool for that, making your offer stand out in a crowded field, how to protect yourself during the transaction and perform your due diligence, and then what you should expect at the closing. Let's start off with the preparation. And I think a good example here is that, what happened 5 years ago and what people were successful at 5 or 6 or 7 or 8 or 10 years ago isn't really successful in an inventory type market. Okay. And let me explain it to you. So there's just a slight difference between the losing flow and a successful flow in getting your offer accepted and getting it and buying a house. And see, buyers today have a lot of information at their fingertips. They can go on to a whole host of websites that'll give them comparables, that'll, show them listings and do all kinds of things. It actually empowers the buyer, right? Gives them a lot of information. The challenge is that it's not really about the information. And what we see happening that we let happen 5 or 10 years ago doesn't really work now. And we need to tighten up on our process flows as far as what we do with our buyers. And so the aviation rule, 1 in 60, means for every 1 degree off and for 60 minutes traveled, you will be 1 mile away from where you want to be, where your destination is. And in real estate, that equates to getting the house or not getting the house. And the 1 degree in our particular case is when buyers put finding the home first, then going 0 to 60, trying to get a lender to pre-approve them, trying to get into brokerage representation and do all that stuff real quick so that they can make an offer, rather than performing the preparation ahead of time and then finding the home and being ready and comfortable to make that right offer. And by the way, being focused on the right things, not the wrong things, in order to make a successful offer. And we're going to talk about that. But let's first talk about the seller. Let's talk about how much more prepared the seller is well before they get into the marketplace compared to a buyer, right? So the seller, they go out, they gain market knowledge, they go to the open houses in their neighborhood, they go to similar properties, they spend that time in understanding what the market will bear for a property and the value perception, meaning, what will a house be worth in its condition, right? So the seller gets up to speed on that. They take money and time and they do interior repairs, exterior repairs. Sometimes they stage the house, they declutter and have the place cleaned, they paint as needed, and they hire an interview an agent, right? They've done all of this before they go on the market. Okay. Not like right when they go on the market. They do it well in advance of when they go on the market. And more importantly, they have a plan as to what they're going to do with the equity from the sale. Okay. And a lot of people, agents and buyers, lose focus of that. And it's a critical point. Okay. Because if you can understand what that seller wants to do and what their plan is, and you can show them that you're the most aligned with them achieving their plan, that's half the battle, right? But if a seller is this prepared, why shouldn't your buyer be too? And you should, because the winning buyers are the most prepared. Okay. Now, the first thing that you've got to do as a buyer is you've got to hire the right professionals and surround yourself with the right people. So I want you to watch this video and I want you to think of getting into contract as being like riding a bull, right? You're being like a bull rider. And here's what I mean by that. When a bull rider gets on a bull, they have a set duration as to how long they have to stay on that bull. As a home buyer, you're going to get in contract and you've got a set duration as to how long you need to be in that contract for until you get to closing. And so, not that I'm a clown, but I would say that real estate agents are just like rodeo clowns, right? Our job is to give you as much information about what's about to happen, protect you if you should get thrown off the bull or thrown out of contract, or if your offer doesn't get accepted. And we should also help you after closing, right? Like, so after the navigation, after the bull ride's over, the bull rider jumps off the bull, right? Same thing. You're going to get to a closing, and then what? You want to make sure that you've got somebody that has the resources, not only for the closing, but if there's things that you want to do after closing, whether it's vendors, information about the home, whatever it might be, I've got the resources to be able to help you even post-closing. Let's take a look at the video, and I hope you enjoy it.
Hey, look at me. Lock in. Crusher here has an extra deltoid muscle. Means he's got exponentially greater bucking propulsion. Now you lean back and you hang on. I'll be there.
Rodeo clowns are a lifesaver.
Rodeo clown? No, I'm with the birthday party.
Hello, Jimmy!
Oh, but I did stay at a Holiday Inn Express last night.
Stay smart. Stay at a Holiday Inn Express.
Now, my question for you is going to be, how would you like to be just getting into a contract and finding out that your rodeo clown doesn't have the experience to be able to help you? That's the wrong time to be finding that out, right? You want to make sure that when you hire the right professional to help you, that they've got the experience and the resources to be able to help you. So when you're looking at hiring an agent, the first thing that you want to do is take a look at the amount of experience that they have. If they have longevity in the marketplace, then you know it's going to be okay, right? Like, for example, 87% of the agents that enter in fail, right? They fail within the first 3 to 5 years, okay? So only 13% of real estate agents make it. So if you're dealing with an agent that's been around for 5 years or more, the good news is that they've got the chops to be able to stay in the marketplace. The marketplace has already washed out the people that can't do it, okay? You're looking for someone with that 5 years. Now let's add on to that, right? If you've been around for 5 years, you have a brand and relationships with other agents. So other agents are developing an opinion of the agent as they go through real estate transactions with that agent. So if you've been around long enough, 5 years or better, you've established a brand, and you also have met many of these other real estate agents, and they know you. They know that the person can get from contract to close and has the resources to be able to go through a smooth transaction. And most importantly, that the agent is going to do what it is that they've promised to do in the contract. And that's important. So the brand relationships are also important, and it comes out of experience, right? So at the very least, 5 years worth of experience, and then you're looking to make sure that they were doing this full time and have the relationships and the brand recognition with the other professionals in the area that you're looking. Now, for you, you're also going to be looking for resources. And how long have they been using their home inspectors? How long have they been in alignment with their title company? You want to understand what resources your agent has that's going to help you get from contract to close and perform all the due diligence and inspections and keep you protected. Most importantly, you're going to want to make sure that the agent is not only available during the day, but also available to you during the evening and on the weekends, right? Because that's when most of the homes get found, most of the offers get written, and that's when you need your agent. Now, during the weekdays and during the days is when you're usually doing closings, meeting appraisers, doing home inspections. All of that stuff is usually kind of during the day work, going back with paperwork, whatever it might be. But availability to the agent is key. And so you're going to want to make sure that the agent picks up your phone call and has a good reputation for being able to get back and being a good communicator. If they're not available to you, the person who's the client, think about how available they're going to be to other agents. And I would say that might go through and if there's no availability there, then that's going to really kind of tell you something about their brand and their relationships with other agents. How does the lender fit into the process, right? So the lender is arguably probably the most important thing, right? Because if you can't get the financing, nothing else matters, right? Don't even waste your time. And so we start with the lender because we want to set realistic expectations, budgets, and times, right? Having a lender go through your information and work through this qualification or pre-approval with you is going to be really important. It's going to make you feel a lot more comfortable about the process. And when it comes time to writing an offer, you're going to be aware of the closing costs. You're going to know what the monthly payment's going to look like. And we would have already set your searches up so that we're only seeing the properties that you're going to be qualified for, right? So the lender is really an important part of this. And you're going to want to make sure that it's a lender that will pick up the phone and have the same brand recognition that I do. A lot of people don't understand that lenders, like realtors, have reputations. And if you're attaching your cart to a horse, like a lender that can't close on time or has a bad reputation, it doesn't matter how great your offer is going to be. It's still not going to be accepted. So I get a lot of people that actually show me their pre-approval letter, usually through a depository lender. And they provide these pre-approvals because they know they're big, right? They know that they're not as nimble as some of the mortgage companies. So they're going to provide that pre-approval or pre-qualified generic letter ahead of time because they anticipate that you probably won't be able to get in touch with their loan officer right away when you need that letter. So if you've got a letter, they know that you can kind of try to use it and fumble through it. Here's when we need the actual pre-approval letter, right? We need the pre-approval letter when we find the home and we're going to make the offer. That's when we need it. And on that pre-approval letter, we want the property address. We want the amount of approval to equal what it is that we're offering on the pre-approval. And we need that lender to also be available to help call the listing agent up and talk about the steps taken to pre-qualify you. Now, this is why we want to get things prepared with the lender ahead of time. If the lender doesn't know you or have a good reputation with you, it's a little bit difficult for them to make that phone call and connect with a listing agent and be able to show them the merits of accepting you as the buyer, right? Because they don't know that much about you, right? So you really want to make sure that you develop a good relationship with a lender that's going to be available during the nights and the weekends when they're most needed, right? And this is when we need the letter. We need the letter when we find the home. You don't need a pre-approval letter at any point before that. I don't need it. All I need to do is talk to your lender. What I do need is a tailored funding letter when we find the property. And why start with the lender? I think I just mentioned it a few moments ago, right? And it's the largest blind spot that buyers have, right? The largest blind spot is that buyers feel like their lender shouldn't be a concern for the seller. If they're pre-approved, they're pre-approved. That's not accurate. And not all pre-approvals and pre-qualifications are the same. Okay. The problem is that many buyers don't understand the differences. They don't even understand the differences between what a funding letter looks like, what a good funding letter looks like, and what a bad funding letter looks like. I'm going to show you that today. So here are the questions that a good seller's agent is going to ask. Okay. It's going to ask the lender. They're going to say, hey, is the borrower W-2 or are they self-employed? They're going to go through, they're going to ask them if they've pulled credit. They're going to talk about whether the employment's been verified. They're going to talk about whether the taxes and other documents have been provided and in hand, what the debt to income ratio is. Have they verified closing funds? Have they verified employment? How quickly is the lender able to close? All of that stuff is going to be discussed. So if you have not prepared well in advance of writing this offer, your loan officer, even if they are available, isn't going to be able to answer some of those questions. It's not going to be a good call. Okay. And this is why a lot of buyers get rejected and they don't understand because they put such a good offer forward. How could I possibly have gotten rejected? How could somebody have beaten me? Or they wait and they see at the closing that a lower offer beat them out. And it's usually because that conversation didn't go well with the lender, or the lender doesn't have a really good reputation. Not the loan officer, but the lender doesn't have a good reputation for being able to close timely. Another key thing here, look down here. One of the things, historical experience. If the loan officer is no different than the realtor, if they've been in business for 5 years and have been doing this full time, they've been out there in the marketplace, they've been meeting agents, they've been funding transactions, and they've been closing transactions. If they have a poor reputation for not being able to communicate properly, not being able to pick up the phone, not being able to close on time, or missing closings altogether or taking too long, if any of that's out there, simply your offer is going to be used to improve another offer, and they'll move forward with somebody else. So not all banks are the same. A lot of people, and this gets into the blind spot, and they say, hey, Chris, I get a credit union. How come they're not really that excited about the credit union funding? Well, because credit unions have a reputation of taking a little bit longer to close, right? And so, seller has a plan for that equity. Okay. They're usually harvesting equity, and they're harvesting all of the repairs and everything and the effort that they put into getting the house ready for the market. They don't want to have to mess around with a bank or a bad lender. And so there's a difference between a mortgage company and a depository lender. So a mortgage company, not to be confused with a mortgage broker, but a mortgage company gets their monies to be able to fund these loans from investors. Depository lenders usually have people that subscribe or are members or people that belong to a bank that make deposits, and those funds are lent out. Well, those larger lending institutions have things set up quite differently, right? Like, for example, I know of a credit union that sends all of their underwriting to Pensacola, Florida, right? So all of their underwriting goes to Pensacola, Florida. It's not done locally. So the loan officer locally is kind of in the dark, and he's not really sure what's going on once it leaves his office. Okay. Same thing with other large banks. They send it out to a central area for processing. Okay. That slows things down. And that's why those lenders can't close as quickly. Okay. So you're going to find that there's points of difference too between the loan officer at a non-depository, like a mortgage company, versus a loan officer at, like, say, for example, the credit union that I just mentioned. The loan officer at the mortgage company is going to do the underwriting locally, and they're going to go through closing. So that loan officer is more familiar with all of the steps in between the origination and getting into closing, right? They know all the steps. They're so close to underwriting that they're actually kind of like underwriters themselves, right? They can identify wrinkles that are going to come up, usually before they come up, and address them during the preparation phase that we talked about. But there's a big difference. And so it's a big blind spot for buyers. They don't think that who they do lending with should make a difference to the seller, but it does. And it does make the difference of people getting a home and not getting a home in many cases. So I'm going to show you two different letters just to kind of drive this point home. So earlier this year in 2021, I had a listing, and I got a couple different letters. I got multiple offers. I'm only going to show you two letters just to kind of show you the difference between lenders, because as a buyer, you wouldn't know. You don't do this every day. But let me share with you, if you look at this verbiage and look down to number 3 and number 4, right? Documentation of income from an acceptable source equal to or greater than provided. That tells me as the listing agent that they really haven't documented the employment and documented and verified the income. Also tells me on number 4 that they don't know whether the person has the available funds to cover the down payment and closing costs. This tells me that the borrower, or the buyer in this particular case, isn't as well prepared as other people, and that they probably didn't go through the right preparation, found the property, and then decided that they were going to write and make an offer on it. The unfortunate thing is that on the phone call, the lender really couldn't answer the questions that I had. Not really going to get into that, but there was a phone call because I do verify this and ask questions. And the feedback that I got on the phone was more alarming than the letter that I got, right? But usually the letter is going to be an indication as to how things are going to go. And in this particular case, they didn't really have much documented. Okay. Now here is the letter from another offer, and they're telling me about what their contingencies are on this loan here. And you don't see any bullet points. All they're really talking about is an appraisal, clear marketable title, and they want a copy of the contract. Okay. Other than that, they're just saying, hey, hope nothing changes in your financial and credit condition. And that's it. And down below, you can see it tells me, they're punching me in the mouth. They're saying, hey, we're locally owned and operated mortgage company, headquartered in Gaithersburg, Maryland, not a mortgage company that I use as my resource, but a mortgage company all the same. And they're not a broker, and all of the mortgage loans are processed, underwritten, and closed in-house. That's a strong message. This whole letter was very strong. And when I called the lender up, he could answer the questions. He knew who the borrower was. He could answer the questions, and he helped sell the buyer to me in addition to the agent, right? So this is a huge blind spot, and lenders do make a difference, and who you attach your cart to can make a difference. Which horse you back can make a difference as to whether you get the house or not. And in the case of lending, I've got a great loan officer. We have another webinar that's a Q&A with him. And at the close of this, we will send out information about that webinar so that you can get that information as well. But this is one of the largest buyer blind spots, and it keeps people from getting home ownership. So what should you expect working with a realtor? Well, you should expect to enter into a contract to hire that brokerage. It's called broker representation. It can be altered and changed to fit many different circumstances, whether it's a time duration, whether you're looking for a specific property or inventory type. All of that can be hatched out and identified within the broker representation agreement. Now, the broker, the buyer's broker, and the buyer's agent are paid through the listing here in Virginia most commonly, about 99% of the time. So they need that buyer representation agreement in order to be able to get paid, but they also need it in order to be able to be held accountable by you, the buyer. It's actually in your best interest to have this buyer representation established. And I would say that you want to get it established sooner rather than later. We talked about preparation, and this is one of those things that needs to be ironed out well in advance of making an offer. You don't want to find a property online, then have to go get through pre-qualification and then also go through and get all of your buyer representation paperwork squared away. That's not what you're supposed to be focused on when you find the right property. When you find the right property, you're trying to figure out what the seller wants, meet those needs, and create an offer that also meets your needs as well. Now, these buyer broker representation agreements are made to be able to get into and get out of them. So you shouldn't be too much worried. What you should expect is usually an engagement term between 3 and 6 months. There should be really no cancellation, nothing prohibiting a cancellation, and you should be looking for no termination fee. If they're giving you a termination fee, it's kind of a win-lose in my idea. I mean, if you're not happy with the agent, you shouldn't have to pay them to get out of an agreement, right? So that's what you should look at for the engagement. They should be able to provide you a real-time search tool that can be used to give them instant feedback and instant notification. You need that, right? You need an agent to have the offer methodology, right? And we're going to talk about mine in a moment, but in this, when we talk about mine, it'll help you educate on this part, but there's realtor homework that's supposed to happen prior to generating an offer. And you're going to want to make sure that an agent is providing that. You also want to make sure that the agent can help you do due diligence when you get into contract and have the resources available to have you, get the property inspected and make sure that you're not buying a lemon. And then lastly, you want an agent that's going to be able to help you navigate the closing process and actually be in attendance for the closing, right? Some agents don't attend closing. In my particular case, I go to every single closing as it's important for me. So what we normally do when we talk about identifying your needs, when we go through with what you were pre-approved for with the lender, then you want to take a look at and say, hey, what is my commute? What are my needs, right? What are my life needs going on here? Do I need to be within a school boundary? Is there certain shops or stores that I need to be around because I go to them frequently, right? You need to consider what's important to you so that we can map out the different communities that are providing you with what it is that you want. And then we want to take a look at the size and the structure that you're looking for as well. How many beds, how many baths? Do you want a yard or not? Do you need a garage? All of that is going to be something that we dial in on so that we can set up the right search for you. And then what we're going to do is we're going to take all of that and merge it with your budget, right? And we're going to be able to see on what the value perception based on clarity, right? Like, so what does that property condition look like for what it is that you're able to afford? So we'll be able to go through that. We'll be able to go through different communities located here in Northern Virginia that are offering what it is that you're looking for and set up searches in those individual communities to make sure that we're getting you only the properties that make sense for you. And we're going to set caps and ranges on our Real Scout search so that you're not getting frustrated or wasting time looking at properties that don't meet your needs. So this is just a screenshot of a 3-up. You can see how we can compare properties side by side, right? Say you had 3 properties, these 3 properties, you'd be able to get exterior shot, exterior shot, exterior shot, kitchen, 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 living room, dining room, bathroom, bathroom, bathroom. So you're able, the tools that I use are a lot different than what you're seeing online, right? A lot of buyers are using Zillow, they're using Redfin, they're using a bunch of different things, right? And all of these user interfaces are set up to achieve a goal. For example, Zillow's goal is to sell advertising space to loan officers and agents. So their goal is to keep you on that site as long as possible and drag you from one page to the next, always doing a call to action, additional advertising, or at least being able to try to schedule a showing or something so that they can put you in touch with an agent. It's not really about refining the search that much. Okay. So what you're looking for from an agent is they're going to be able to provide you with a search tool that updates in real time, because speed is key, especially when you have the neighborhood dialed in on that you want and you want to be able to move quickly, right? You want to be able to have an in-app message ability to be able to hit me in 30 seconds, which is what Real Scout does for me. And then you want those powerful filters so that you're not wasting time on properties and focus on properties that don't meet your needs. You want to be able to hone in on the important ones so that you can act more quickly and be able to put compelling offers to paper. And then you want to be able to do, as this Real Scout does, which is side-by-side comparison. So your user interface should be about filtering out properties, not about keeping you online long enough to be able to suck you in as a lead capture, right? And so Real Scout, in my particular case, satisfies that, and it's geared towards filtering out properties. Big thing I get is when a lot of people talk to me, they're like, hey, Chris, I don't want to bother you. I'll just go to an open house. Well, there's a little bit of difference. If you think you might like the house, you don't want to wait for the open house. Somebody else can get in there, write an offer, maybe take it off the market, or it's going to increase the amount of competition as well, right? So if the property stays on the market for 2 or 3 days longer, that many more people have seen the property and that many more people we're competing against. So what I try to tell people is when you see a property that you like, let's arrange a time. Don't worry about me. Let's get in there and see the property. And showings are usually, can be arranged same day. It's better if it's a day in advance. With COVID, we're not able to get as many showings in the course of a day for a property because they don't really allow us to overlap appointment times. And knowing that, us being able to arrive on time is super important, right? Not only for if a property is occupied, but also just knowing that we've got less showing times. We want to make sure that people before and after us are able to have their showing time as well. And if we arrive late, we might not be able to see the property. So the benefit of a private showing is that we're able to speak freely. And usually you're going to go around the house and focus on some of the cosmetics and livability of it. Well, I'm going to be going around looking at the roof, the HVAC, the windows, some of the structural items, foundation, but it allows us to be able to speak freely as well because it'll only be us in the house. Normally, we're doing this for 15 to 30 minutes, depending on the size of the house and depending on what the seller is allowing. Now, an open house, what happens is you have an agent that is there from the seller's brokerage. It's not private, and you need to be reserved in what you say. Agents are trained to try to pull out people's motivation, and the last thing we need is sharing our motivations without really having an offer in place and making sure that our motivation and narrative match the offer, right? So we want to make sure that we're reserved in what we say, and they can already be under contract with an offer. So waiting to the open house isn't a benefit. All you've got to do for open houses is just give me a call, and I can call and reserve you and register you so you don't have to sign in either. So there's different things. Now, we see a lot of agents doing open houses on Saturdays and Sundays because they're not able to get as many open houses because properties don't stay on the market that long anymore. When we do see that happening, here's a funny story of an open house on a Saturday. My clients from Puerto Rico and I were out seeing a house. Now they've since bought, and we were interested in this house, and another group came in and they thought that my clients did not speak Spanish. And they were talking about all the elements of their offer in Spanish as if nobody could understand what they were talking about. The challenge with that is we knew fully well with what they were going to offer, how much, what the contingency types were, and what the strengths and weaknesses of their offer were, just because they were talking at an open house in a public forum. So the big thing here is going to open houses isn't bad, but if you might like the house, let's get in there earlier. Let's do a private showing before the open house. And if you do have to go to an open house, be very reserved in what you say and how you act. Now, when we do find that winner of a house and we've got to make an offer that stands out, now's where we really come up. And you remember when we were talking about hiring the professional, I talked about the offer methodology, right? And so here's what an agent is supposed to be focused on. Okay. They should be verifying the value of the property by looking at the comparables, right? They should be socializing, calling that agent up, asking them questions about the property, asking them questions about what they would like to see as far as an offer goes, what the seller's needs are, and they should be researching that agent's transaction history because the proof is in the numbers too. We get to know how agents price, whether they price high and come down, or whether they price low and march their way up, whether they give subsidies or not. All of that is found out when we research the agent. So when we figure all of that out between verifying the comparables, socializing, getting information, researching the agent, researching the seller, then we determine our strategy, right? And we get, at that point, we call the lender up and get the tailored pre-approval funding letter, right? We create the offer paperwork, which can take as long as 2 hours, depending on how complicated the paperwork has to be and how complicated the offer is. And then when we submit the offer, not only do I call the listing agent, but we also have the lender call the listing agent as well, so that we separate ourselves out from the rest of the field, especially those that are using depository lenders whose loan officers are home sleeping, cooking dinner, having a day off, whatever it might be. The loan officers I'm recommending are calling during the evenings and weekends and helping me get that offer accepted. Now, I want you to take a look at the slide and let's think about it for a moment. What if we had to put in a few more things here? What if we had to put in, get pre-qualified by a lender and send them all of your stuff? Have a conversation, upload documents into a lender portal, right? That's going to take a little bit of time. What happens if we had to establish buyer representation and go through not only the buyer representation agreement, and you and I have to talk about that, but then all of the disclosure documents that we need to do as well that are required? What if we added some of these things in here and we're focused on that? What are we going to give up? Because we can't do it all, right? Do you think we have time to socialize and research the agent? An agent's going to do that if he has to establish buyer representation before he makes an offer? He's going to establish the buyer representation, right? He or she might not verify the comparables or socialize or research the agent at all. They might just write the offer. Okay. So there's a lot of stuff that goes on when it's time to make the offer, right? And it's the last time for you, it's the last time in the world that you want to be getting pre-qualified, pre-approved, or establishing buyer representation. That should all be done ahead of time. That's a huge blind spot. Now, let's talk about general information about offers. Okay. Offers are active until they are rejected or pulled back. Now, if someone likes your offer and they do a counter to it and cross something out and put another term in or do something to it, that is a rejection of the first offer and a counter offer, meaning you're not obligated, right? Negotiations can go well into the evening hours, and that we don't go to sleep until all parties have agreed that, hey, we're shutting it down for the day. And as far as being on the buy side, you do not want it to shut down. You want to go as long and as hard as it takes to get that signature and get it ratified, because in between that night and that morning, they might receive another offer or two, and it might be better than yours. So don't go to sleep and stay focused on what's important, which is getting the property. Now, I had a transaction earlier this year. Actually, it was last year. And what ended up happening is we were going back and forth. We had 5 or 6 offers, all very decent offers. And one party decided that that they were going to go to dinner. Okay. And so what they were really trying to do, in my opinion, is the offer was good. They manipulated us a little bit on that. And then what they wanted to do was organize another showing the next day and do all this stuff. And what they were trying to do is get the other offers to flake out. This party ended up not getting the property. In fact, the guy that was the buyer at that point in time ended up becoming a real estate agent. Go figure. And they didn't get the property. Somebody else did, because we got another offer in, right? We got another offer that beat out their offer. And plain and simple, they lost. And they could have had the property. Need for speed is important, because as more time goes on, more offers come in. So we need to react quickly. We need to make sure that that we can make decisions really quickly. And having been pre-approved ahead of time really gives us a good sense of comfort, because at that point we can really make decisions very quickly. Now, we always ask about how an agent's going to present our offer, or how's that going to work? That's an important thing that happens, because we want to know our offer needs to either fit into that, or it needs to be presented in a way that manipulates that and favors us. So there's a lot of different things about offers. It's a lot of fun. It's even more fun in a balanced market, because it's really about skill at that point in time. And just as an overall, we pretty much know that you're going to be competing against multiple offers at this point in time. That's just the way that it goes. You've seen the inventory charts ahead of time, and that's just the way that it is. There's nothing that we can do about that. So we need to make sure that we're properly prepared, that we understand the offer process, and that we're focused on the right things when we've got to make the offer. And then once we make the offer, well, we just got to be up to speed on how that's going to work and how quickly we need to respond. Now, the seller, when they get an offer, their focus is a little bit different, right? They're focused on their net. Remember, they've had visions of what that net's going to look like, right? And so they want to be able to harvest that, and they're looking for the surest way that they're going to be able to harvest that in the shortest amount of time, right? And so they're going to be looking at your down payment, because they know that loans can change. Your down payment could change if an appraisal came up and it didn't appraise, and they needed to take some of that down payment off and use to overcome the appraisal. So they're going to be focused on your down payment. They're going to be focused on your loan type. For example, VA and FHA loans do not allow the borrower to waive appraisal. There's a mandatory clause. And so, they're going to be focused on that. They're going to be focused on the amount of earnest money that you have, because, they're going to look at it as a sign of your ability to be able to get the transaction done and your seriousness. They're going to be wondering about who your title company is, and they might be focused on your possession date. And what I mean by that is, if they're buying another house in 60 days, And if they could close in 30 and then rent the property back from you for an additional 30, that gives them the closing and all the funds to be able to do the second transaction. So some days on some transactions, possession date is super important. And then the other contingencies, whether it's the financing, the home inspection, whatever it might be, whatever contingencies you have, they're going to be looking at, because their whole goal is to remove all those contingencies as quickly as possible. And in this market, they're able to kind of drive competition and to be able to remove those contingencies and terms to make a pretty clean offer in this market. So due diligence, once we're accepted, right, we have a due diligence period. See, Virginia is caveat emptor, which means buyer beware. And so, you know, it's always a good idea to get a home inspection and, you know, for condition of house. And then the appraisal is going to be the determination of value for the bank to protect you there. And then the title company is going to protect you to make sure that they've got clear and marketable title. And so during the home inspection, what we're seeing now is, you know, over the last 2 years, we've seen more information only home inspections, a lot less negotiation of repairs of items. We don't see that really that much anymore. We see info only, and we see a lot of people doing walk and talks during a second showing with a home inspector present, so that you know what you're doing and you can write an offer without a home inspection, right? Contingency, because that'll help set you apart in many cases. In the really desirable inventory types and places, it's going to be a standard that you go in with no home inspection. And then we're going to be looking at the big stuff, right? We want to make sure, you know, what's up with the roof, the foundation, the windows, the HVAC, everything that's important and is a big ticket item. You know, if there's a scratch on the floor, if the paint's kind of old, if the carpet's worn, you know, we didn't really need a home inspector to tell us about that, right? We need him to tell us about the stuff that is not apparent to us because we either A, couldn't see it, or we don't have the professional wherewithal to be able to identify, for example, a manufacture date on an HVAC unit, right? So we're looking at the big ticket items, and we're normally doing that as a walk and talk during a second showing, right? When we set the schedule and expectations, or we're doing it within the first 3 days after a ratification. Agents that are going 5 and 7 days after ratification are just helping other offers get accepted. If we're in a property owners association or a condo, we're going to have document review, right? And because we're buying into an association that's collecting monies, and we're going to have 3 days in which we can review those documents. So documents are going to be like the budget. It's going to be the rules of the road and the covenants. It's going to be the reserve study. There's going to be a lot of information that we'll be able to get. Now, if there's anything that makes us feel uncomfortable, we're going to be able to exit the transaction unilaterally within 3 days after receipt. And if it's a big package, or if there's a lot of issues that we need to get past, meaning a lot of issues like we've got to reach out to one of the board members because we're a little confused about some of their numbers, well, we can get an extension as well. But just know that we will have an association review, whether it's a homeowners association or whether it's a condo, and it does give us the avenue to leave unilaterally within 3 days after receipt. Now, the appraisal is due diligence that's going to be done on behalf of your bank, and it's going to be required as a condition of your financing. It's supposed to be an unbiased opinion of value, and what normally happens is the appraiser makes an appointment, goes to the listing, meets the listing agent who shows them the comps and the methodology behind the pricing. Us, as you being the buyer or me as the buyer's agent, normally do not attend. And when the appraisal is complete, it will be returned to the bank's underwriter. The underwriter will review it, and then it will be brought out and sent to you. Okay. And then we'll kind of know. You'll receive a copy at that point. Now, if an appraisal is low, it usually gives the parties an opportunity to be able to negotiate that price downward. Depending on the loan type, it allows you to be able to move forward even if you have to kick in more as a buyer. So say the property was off by $10,000 and you were putting 20% down, you could actually have all parties sign off on a different down payment, and that you would use that 10,000 as part of your deposit to overcome that value difference between the appraised value and the contract price. So there's ways to go around it. And then if the parties can't agree, well, the lender's not going to lend, well, that means that the transaction just won't occur, and that parties will have to move on, and you'll be able to keep your earnest money. So that's the dealio with the appraisal. Now, the title company usually is moving around in the background. And it's funny, I see a lot of people scrolling and looking around for the best title rates and the best title insurance rate or the closing fees. And there's not a huge amount. Most of the closing fees are really taxes. And on the buy side, it's usually taxes and your actual title insurance. But what the title company is going to do is they're going to perform an abstract, which is where they go back 65 years, review all the transactions on the recordings with the county or the municipality to make sure that everything's been recorded correctly, that there's no other liens or claims on your property, and to make sure that they've got clean and marketable title, right? Because they have to issue the title insurance for the lender as well as the title insurance for you. They're going to coordinate all the documents, prepare the deed. They're going to manage that escrow, that EMD amount that we had given them. They're actually going to perform the settlement. They'll disperse the funds after we close. They're going to record the deed. And, that's just the surface stuff. If there's ever a moment where the transaction goes sideways between the party, it's usually a smart settlement attorney that's able to help me keep things on the rail and keep the seller accountable to whatever the agreement was. And so when you're comparing on fees only, that could be a mistake, because what you're really looking for is the intellectual horsepower of a good settlement attorney. And hopefully you'll never have to use those services. But that's why you don't compete on fees alone, because you want the good guy in the background that's looking at things, that's going to be able to help you keep the seller accountable to the contract that you got into. Okay. Now, before closing, there's going to be a walkthrough. We do this between 1 and 3 days before settlement. Now, it's not another home inspection. All it's meant to do is to make sure that the property is in substantially the same condition as it was on the day of whatever we agreed it to be. Sometimes it's the day of offer, someday it's the home inspection day, whatever it might be. But we want it to be in a substantially the same condition. So what we're looking for here is, for example, if a mover came down and knocked out a banister, or a piano went into a wall, we'd want the seller to be able to fix that, or the mover, but it's really on the seller to get that fixed. Want to make sure that all the appliances that were promised and everything that we thought that was going to go along with the house is still there, right? And any agreed upon repairs or items that were agreed to have been repaired as a condition of an appraisal, for like a VA appraisal, or in the case where we are able to have a home inspection, that any agreed upon repairs have been completed. All right. And so we take a look at the invoices and we look at the repairs at this point in time too. More often than not, this is only a 10 to 15 to 20 minute max walk through the property. It's not meant to be another home inspection, and it can be done during the day or the evening. Now, when we get to settlement, it's a happy day, right? You're going to allow for up to 1 hour. Now, it should only really take us 45 minutes. And we should show up about 10 minutes early, and keep in mind that, a lot of these settlements have scheduled out anywhere from 15 to 40 days in advance. So the schedule is the schedule, and we want to make sure that we show up and target for 10 minutes early. And we want to bring a driver's license and or a passport. Now, the lenders I usually recommend only require one ID. So we want to make sure that we understand what the lender is going to require. But at the bare minimum, you're going to need one. So bring your driver's license. And your funds need to be sent in either one or two ways. We can either wire it, which we can arrange with the title company ahead of time. That's not to be confused with an EFT. It's an actual wire that's set up from the bank that sends the funds over to the title company, which they will hold in escrow and perform the closing with. Now we can also come with a check, and that check is in the form of a cashier's check, not to be confused with a certified check, right? So cashier's check, not certified, wire, not EFT, right? And when you do show up for the closing, bring a personal check, because more often than not, there will either be an overage on the amounts that have been wired or cashiered in, because the even though you get a closing disclosure 3 days before, the amount of the closing cost might change a little bit, and there might be a refund that they need to provide you. And what they'll do is take a voided check, and or if there's any funds that are owed at that point in time, they'll collect it. They can collect anything less than $1,000 on a personal check. So what's going to happen is that they're going to look over your ALTA statement and your closing disclosure, make sure everything is right. And you would have seen the closing disclosure with your lender before this, but they're going to review all the statements. Then they're going to review the note and the deed. And then they're going to go through and have all of the lender documents signed, right? And the thing that takes the longest is probably all those lender documents. But the good thing is that the closing representative is going to be able to go over all of those documents with you and make sure that you're comfortable with what you're signing and answer any questions that you have. It's pretty low key. And in today's environment, we normally see buyers and sellers doing different settlements, not sitting at the same table. And that's because people have different schedules. They've got different needs and wants. And we're just trying to facilitate it so that everybody gets what it is that they want in the time and manner in which they want it done, right? Your deed is going to be recorded within 48 hours after closing, and you're going to receive the keys at the closing table. The house is yours at that point in time. So it's that simple. And I just want to say, I hope you found this interesting today. It's kind of like a fire hose of information coming at you. The next section that I just want to go over for a couple minutes is really for the people who are looking to get pre-qualified and what I do for those people. If you've already had your information in your fill of real estate for one day, you can kind of check out now. But if you're interested, this is what I normally give to people that are getting to get pre-qualified through my lender. I normally, even before representation paperwork is established, I allow them access into my Facebook group for buyers that has a video and blog library. You're able to submit questions and interact with the group, and your access to trusted vendors and resources is also within that group. In addition to that, I pay for a subscription to Real Scout, and the focus is on selection, not lead capture or lead generation, meaning you're a lead. I'm going to capture you. I got to keep you on this page and show you some interesting pictures so that you click on something. No, this is all geared up with great user interface to help you narrow down these homes so that you're looking at the properties that are most fit your needs, right? And that you're not wasting time, because if you're wasting time looking at properties that don't fit your needs, you're going to miss the right one, right? Because there's tons of properties, right? Even though we're in a low inventory market, you're just one person. And if we have, 2,500 properties in an area, that's a lot of properties to look at, right? You don't want to miss the right one, because the right one's going to come on the market, and it's only going to be on the market for a couple of days. So the good thing is with Real Scout is you can get that instant alert, and you can notify me on that platform that you want to schedule a showing, right? And that's about it. So I hope you found today interesting, and I hope it gave you a lot of information. If we had the lender portion of this, it would easily take another 45 minutes, which is why we follow up with a webinar with my best lending resource. So you'll be getting more information about that. And I just wanted, again, to thank you for hopping on the webinar. Feel free to hit me up with any of your real estate questions, and I look forward to touching base and doing business with you soon.